You're listening to Real Talk Texas with local expert Steve Hakes. Now, here's Steve.
Welcome back to Real Talk Texas. I'm Steve Hakes. I'm your host. And today in the studio, we've got Dr. Carl Howell with Val Trust Capital Partners. His website is
retirementfoundationgroup.com.
Great. And we also have our reverse mortgage expert that's on the show today, and her name is Lorraine Geraci, and she's with Urban Financial Group, and they're my resource for when I'm doing reverse mortgages for my clients. And Lorraine's our trainer, and she really makes sure that everyone knows what they're doing, and they're experts in their own right. And so I thought I'd bring her on the show today to kind of share her wealth of knowledge with you listeners.
You know, Lorraine, I got to bring it up. On the last segment, we left off talking about long-term care, and that's a hot button for me. I actually got started in financial planning because I saw the need for this several years ago, and the fact is that today, if you're over 65 years old, there's a 70% chance that at some time in your life you're going to need long-term care. And the one thing that I run into with both widows and widowers is that they want to stay home. If they need care, they want to remain in their home. They don't want to be put into a facility or have the government, if they have to go for government subsidies, that's the only thing they'll pay for are those Medicaid facilities. But if they want to stay in their home, what a great opportunity for them to take out some equity and be able to afford to have somebody come in and help them if they need it. And I'm sure you see a lot of that, and you probably could expand on that just a little bit.
Absolutely. I think it's a huge focus that people should be more aware of, and I appreciate the statistic. All too often, too, when I had done reverse mortgages in the past, I've assisted a lot of family members in providing the program to them to help pay for in-home care, which can be very costly, as you know. And a lot of the reverse mortgage proceeds would get eaten up very quickly by providing that monthly payment to keep their loved ones in home and taken care of. Long-term care insurance certainly can go a much farther way with being able to prepare for the future and be comfortable, as you mentioned, with people wanting to make sure that they stay in their property and, you know, be comfortable in their older years if they do need that care. So it certainly is a usage of this program to think about, not just for the actual client, but for the children of the client as well, looking into it for future reference.
Right. You know, before we move on, I just want to say that we've had clients, you know, who have actually done reverse mortgages. And one of the benefits, the government passed a bill a few years ago called the Pension Protection Act, where now you can actually set up a program of linked benefits for income or long-term care if needed, and you can take part of that lump sum payout, put that into a program, and that will give you much greater funds than possibly just what the reverse mortgage would have in the first place, but it gives you a vehicle to get that type of program available to the client.
And if you're interested in that, make sure you reach out. Call our show at 817-925-2546. That's 817-925-2546. Go ahead and send a text or leave a message there. Just say you want more information on the reverse mortgage. And one of the things I do is I work closely with Dr. Carl Howell and his company because he really focuses in on the senior market. And really, we've had shows before. If you're a regular listener, you've heard him talk about getting ready to go into retirement or how to maximize your income while you're in retirement. And one of the things he's really pounded on is this long-term care issue, and it's one of the things I think that scares a lot of us for our parents or for ourselves sometime long-term. So it's something that you really should reach out, give us a call, and we'll be able to answer all your questions. And so you were talking a little bit about the lump sum benefit, and one of the ways you do that, you can either get it cash up front or you can do a line of credit, which is very cool. There's also other strategies where you can get monthly payments, right, Lorraine?
That's correct, yes. You can either get them monthly for lifetime, which is called a 10-year program. So as long as you remain in your property, you will get that amount of money every month. Or you can have a larger amount a month. Let's say, utilizing the example that Carl and I spoke about, somebody wanted to use reverse mortgage proceeds to pay for in-home care, X number of dollars a month will go a certain number of years. So we're able to modify the strategy that's going to best suit the individual client and whatever their needs might be.
And then also they can use that monthly payment to, you're saying, make the premium payment on that insurance policy, right?
Correct. Well, they can do that, or they could take the lump sum out and set up a lifetime benefit program through what's called a linked benefit. They can do that in a couple of vehicles. Several insurance companies have that option, but what I've seen, what the benefit is that people maybe needed to modify their home, and they were able to take that reverse mortgage and do some modifications that would help them to get around their house better. Maybe they needed a wheelchair ramp or something like that, and then set up the Pension Protection Act. And again, they were house rich and cash poor, and they just needed a little extra help, and that's the beauty of the reverse mortgage.
Yeah, well, absolutely.
In Texas, we're a homestead state, and so we have some unique laws about cash out. We can only take 80% cash out on a home equity loan here, and I'm sure that plays into our ability to be able to do the reverse mortgage as well, doesn't it?
Well, actually, in some it used to. However, recently the government has instituted new rules and regulations with regard to upfront lump cash in the first 12 months. So a client can only take 60% of their proceeds in the first year on an adjustable program, or they can take the amount of their mandatory obligations, like say they have to pay off a loan or something of that nature, plus 10%. So that will change and modify the amount of mortgage insurance premium that is paid on the loan, depending on which option they choose, or if they even have an option at all. So that will satisfy the Texas rule unto itself these days.
Right, and then the following year they can take additional funds out if they're in that line of credit, or even if they do the lump sum, they get more in year 2 or 3 or 4. How's that work?
Yes, if they have an adjustable rate option, then the first 12 months they will be 60% will be their maximum capacity that they can withdraw, and after that 12 months they can certainly utilize whatever other proceeds are left, whether it's a credit line, monthly payment, etc. It'll be adjusted accordingly. So.
Okay, so let's get into some frequently asked questions on reverse mortgages, because I want to make sure we try to cover all of those. So I'm going to give you an opportunity to answer some of these. So, one of the first questions I always hear is, do my kids or my heirs, do they have to pay back the reverse mortgage when I pass away?
That's a good question. The answer is no. Basically, the home or the property is the only option of payment of the loan back. There's no personal obligation or liability on behalf of the heirs or the children. So at the time that the homeowner passes the estate on, the heirs have a decision to make. Do we want to keep the home or do we want to sell it? So if they decide to sell it, they pay off the reverse mortgage, and any equity remaining left above and beyond goes to them just like it would normally. If they decide to keep the property, then they would have to take out a mortgage of their own, pay off the reverse mortgage, and keep the property to themselves.
Hey, Lorraine, let me ask you a question. Let's say you had a client who decided that maybe they wanted to sell their home, and they had a reverse mortgage on it. And a lot of times I've been asked this in the past, is there a prepayment penalty? And am I available? Can I sell my home if I have a reverse mortgage on it?
Yep, good question. The answer is yes, absolutely. You can certainly do that. And at the time of sale, just like any other lien on the property, it would have to, whatever was owed based on the proceeds of the reverse mortgage plus any interest that grew on the amount that had been utilized, needs to be paid off at closing. The rest of the equity goes with them wherever they go.
Well, let me ask you another question. I mean, I'm sure people that are listening out there are asking, maybe they're in that situation we talked about earlier where they're a senior, they've got large credit card debt, maybe they fell behind on some of their credit card debt or something like that. Do they have to qualify to get this reverse mortgage?
Great question again. At this point in time, there are no income and credit qualifications associated with getting a reverse mortgage. Coming soon in the next few months or so, there will be some qualifications to determine whether or not taxes and homeowners insurance have to be escrowed into the amount of the proceeds of the set-aside. That's coming soon, just to make sure that people understand and are obligated to pay their taxes and insurance, with the a focus on the entire industry to make sure that happens. But there are no FICO scores that are required in order to participate in the program. Basically, it's home ownership, age appropriate, and the amount of equity available above and beyond any loans that have to be paid off.
So, Lorraine, what you're saying is that there's a window of opportunity here right now that's going to be closing a little bit, and maybe not that much, but still going to be closing a little bit. So this is a great time for anybody who's thinking about a reverse mortgage to call Steve and get more information on a reverse mortgage, I would think. Wouldn't you, Steve?
Thank you, Carl.
Okay.
Absolutely. Hey, I got another question for you, and that is, and this probably comes up when you're doing the financial analysis, and I know you do that great program where you talk about Social Security and how to maximize all that. Does this affect their Social Security benefits or any other benefits that they might get?
Yeah, good question. It does not. If this is not considered income, these are loan proceeds that will eventually have to be paid back by the sale of the property, and it does not affect most qualifications for income, such as Social Security and Medicare. However, what we do advise folks that with respect to Medicaid and SSI and things of that nature, they should consult with a tax professional to indicate whether or not any loan proceeds would affect those benefits. But for the most part, does not affect the average benefits that most older adults are able to get.
Do you have to pay taxes on the proceed when they come in?
No, you do not.
Because it's a loan, right?
Let's say, it's just a loan, just like a home equity loan. Let's say, for example, you take money out of your home equity loan and you go invest it someplace, and it earns additional income above and beyond that. Then, of course, that additional income is taxable. However, loan proceeds, reverse mortgage fund proceeds are not taxable income.
We're going to go to a break right now. You're listening to Real Talk Texas. Today in the studio, we've got Dr. Carl Howe and we've got Lorraine Geraci, and we're talking about reverse mortgages. We're going to come back after the break. We're going to get into some more details, and we're going to also give you a hint as to where you can go find out more, and also a seminar that's coming up in the near future from Dr. Carl Howe's firm, Val Trust Capital Partners. So we'll see you after the break.